What's up, everybody? This is Jimmy with Trade Decoded. It is April 8th, 2025, and another historic day in the markets. I think we moved $46.80 so far. The day's not over. Absolute insanity. And if you see my thumbnail today, that's probably what your face looked like when we saw the cost of the contracts. By far, the most expensive contracts I've ever seen since I started trading. So we've got historic factors happening left and right. If you don't know, tariffs got paused for everybody but China for a little while. There's going to remain a 10% flat tariff across the board for now. China's at 125%. That's what shot the market up through the roof a little bit later in the day, as far as after we get off the mic. But nonetheless, again, people either got really lucky or people lost a whole lot of money because that move was insanely fast. But without further ado, let's go ahead and take a look at the chart so we could talk about the trades we found while we were trading. We had a call put line. The call line was 417.26 on the Qs. The put line was 413.51. So a rather large range, but necessary nonetheless because, well, the expense. You may not care about the expense of your contracts, but as day traders, we thoroughly enjoy the moves that we're getting. However, at some point, the cost of the trade is going to concern you. Today, that was the case for me. I got in, and I didn't stay in for very long, and my fills were not great because the spreads were huge. And when you market in and out of trades on volatility, sometimes bad things happen. So it was well over $1 move from entry to exit, or at least for what I thought I was getting. But my fills only produced about a 4.6% win. Now, with contracts costing over $8,000 a piece, the 4.6% is still good money, but it wasn't worth the risk to reward for me personally. But if you can get past all that, well, the rules that are in place for us to use as to why we take trades and what we expect to happen and this, that, and the other thing still work. Okay, so this morning we got above the call line. We were breaking through resistance. ADD was printing green. We were looking for at least the next line up. Now, again, the space between these lines is pretty big. That's $1.25 from entry if you waited for this candle here to the first line. If you held on a little bit more, you got a $2 move. But like I said, I marketed in and I marketed out, and my fills were crap. So it wasn't a huge win percentage-wise, dollar amount-wise. I'm pretty happy. We pulled back, put in a higher low. We move up, which means because of the higher low, we're more likely to break resistance and continue up. We hit another resistance up there. Again, a higher low. Then we start talking about, guys, this is a wedge that normally breaks up. We know this. It's just statistics say we're more likely to get through this to the upside than the downside. And again, we have the conversation about when is the best time to buy calls. It's pullbacks to support or the trend line in this case. Great. If you took that, then you got to be in profit by the time we got back up to resistance. Also, if you were already in it, you got to take the ride through the resistance up to the next resistance. I was not in this trade, but we were talking about it several minutes before it became a trade. And again, these are the rules we follow day in and day out. Likewise, when do we want to take puts? Well, we started talking about this, not when we come back down to the trend line. If you want to take puts when we're coming down to the trend line, just take a look over here at your ADD chart and see if it's printing green or red. If it's printing red, we don't buy the pullback. Momentum's not in your favor. In fact, if we close below that trend line and take out support, we're looking for it to go down to the next support, which in this case was right here. Now, from this line to that line doesn't look like a long way down. Again, that was about an 80-cent move. 80-cent moves pay very well, and it moved a little bit lower than that to begin with. So that was a dollar move plus if you got into it when you were supposed to. And that's just from line to line. The other thing was another lower high, so we're expecting to break through this support and move down to the next support. Well, as you can see, not only did we break through that support that we made, we moved down to the support that was next in line. It held, we bounced off of it. Now what are we looking for? Nothing. Puts come off the table because we got through resistance, or because we got above the trend line. We wait for a move through resistance if you're trying to play it. Now this one, Didn't work out. We would be hoping for this to continue up to this resistance here. During days like this, by the way, guys, we do a lot of talking about being careful. At this point, a lot of people are already done trading. So being aggressive during times like this is super sketchy. Now, for futures traders out there, this is great for you, except for the fact that you can easily blow up your prop accounts with some of these candles. These candles are massive. They don't look big, but they're massive. $2, $3, $4 candles are regular things these days, which is insane. Nonetheless, we find one more trade before the end of the day. I had to go pick up my daughter from school. She called out sick, so I left at 11:30 today. But what do we got here? We pull back to support. Okay, we don't want to buy that. We do want to break that support. And we were talking about this trade long before this happened. And I told everybody, if we're able to get through that orange line there, I'd be looking for this thing to dip all the way down to 416.45. Coming off of lower highs, that gets people in a little bit more aggressively, especially when you look over here and see ADD is trending down. We're printing red. So some people got into this trade sooner. But if you waited for the break of support, well, you got in here and you got your move straight down to our beep. It did ultimately move a hair down farther, but that was pretty much it. Then these are big moves up and down, guys. And then, of course, you have this. This here is just over a $40 move to the upside. It's crazy that we've had 2 of those in 1 week alone. Absolute insanity, guys. This market is out of control. It's out of control. Now, some people may have been in a put here because of a bias or whatever the case is. Man, if you were, you lost the house. That is catastrophic move against you. If you happen to be holding and hoping in calls, which I don't know why at that point you would have been in calls, kudos to you. You accidentally made it an assload of money. So congratulations on that. If you are wondering what to do now, do nothing. Do nothing. We are in a situation, guys, where the market is literally moving, not because it's pricing in what it knows it's going to happen. It's moving based on anything that anybody of any importance says. Extremely volatile, extremely dangerous. You do not want to hang out in your trades for too long in markets like this. This is where my type of trading and my strategy shines, because we're never looking for home runs. If you happen to be in a trade and you accidentally get a home run trade because of something like this when we were already in a position, that's awesome. But man, if you are trying to figure out how to catch something like that, it's luck. It's luck. There's no way you would have known that that was going to happen. Just like there's no way to expect a $5 candle at the top of this to just show up. You cannot beat yourself up about not being in a trade like that. I had a guy in my community today say, man, I wish I would have held my calls. Why? Why? Because you knew they were going to pause tariffs and that we were going to get a $40 move to the upside? Of course not. You're only saying it because you saw what happened after, which is a big problem because we do that to ourselves as traders all too often. And then what you're doing is you're just planting the seed saying, you know what? Next time I'm in a trade that I know I should get out of, I'm not going to get out of it because remember that one time it moved up $40 after I took my profits? Yeah, you do that one too many times. In fact, it's a losing strategy. You'll lose more often than you win. Okay? So guys, just play responsibly. If you are looking at your contract prices and you're seeing that you're extremely uncomfortable with whether the way the market's moving or the fact that the market has no guidance whatsoever, or it seems like a $20 ranging day is just normal now. If you're not comfortable with all of that, which is very difficult to be comfortable with, you shouldn't do anything. Just walk away. Just walk away. Because if you take a trade at a time that you're not comfortable, you're going to mismanage that trade horribly. You might get lucky, but more often than not, you're going to lose money. Okay? Protecting your capital is the most important thing you can do as a day trader. Okay? We don't get to sit in the market and wait for it to recover. That's investing. Investing is very easy. Put your money in the account, buy good companies, 20 years later, 30 years later, 40 years later, come back and it's worth a lot more money. When you're taking the risk that is day trading, you better walk on eggshells, especially at times like this. Okay, so with that, we're going to wrap it up. I hope you guys found some useful information in this video. If you did, please like, share, and subscribe. And if you'd like to learn how to do this on your own or in conjunction with being in a live room with us, well, you can join my Discord community. There's links down below, or you can buy my book right here, or you could do both, which is fantastic. If you've already purchased the book, please consider leaving a review on Amazon for me. I'd really appreciate it. With that said, I hope you all had a fantastic day, and we'll see what tomorrow brings. Till then, I love you guys. See you.